Hello, good morning, investors and corporate. Welcome to SET Digital Roadshow First Quarter 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite Central PATTANA Public Company Limited to start the presentation, please. Thank you very much.
Thank you. Thank you, Seth, for having us, and good morning or good afternoon, everyone. Allow me to share the screen so bear with me for a sec. Okay. So just a quick recap of where we are. So in first quarter 2023, we only have one new project open, which is the hotel in the Ubon Ratchathani province, which is in the northeastern part of Thailand. So at the end of first quarter, we still have 56 retail projects in total. So one of that, as you recall, would be the Mega Bang Na, which is a JV investment that we recorded in the share of profit line. We also have 10 offices, 28 residential projects, and 5 hotels in total. So as of the end of first quarter, we have our retail NLA of 2.3 million. That also includes all 56 retail projects that I just mentioned. We are the market leader in terms of retail developer. So countrywide, we have 22% market share, but that also includes hypermarket players as well. But in upcountry, if you compare only the big size shopping malls, you can see that we are the clear market leader, as other developers such as the mall and Siam Piwat are more focused in Bangkok and greater Bangkok area. So far, right now we have the presence in about 21 provinces nationwide. That's about 1/3 of the provinces in Thailand. So we still have room to go into other provinces once the GDP per capita and the catchment area is big enough for us to expand into. Plus, for first tier provinces, we still have room to continue to add more retail project once the GDP per capita became bigger, such as those in Phuket and Chonburi area. So as you recall, before 2016, we used to focus on our retail property, and we do have some projects that have the hotel and office projects that is next to our retail project. Now, since 2016 onwards, our focus has shifted to being the mixed-use development strategy, and we'll continue to add more elements into our ecosystem as we aim to build the complete ecosystem in our project to become and to achieve the top of mind positioning for shoppers and for tenants as well. And you can see that if we compare only rental revenue and the total revenue with hotels and residential as well, you can see that it actually helped in terms of the past CAGR. So if we only focus on the retail project, our CAGR would have been 100 to 200 basis points lower than what we have as a mixed-use development strategy. So as I mentioned, the concept of mixed-use strategy is nothing new for us. So the first project that we own, which is Central Lat Phraw, was actually the mixed-use project by itself. but the hotel is actually owned and managed by our sister company, which is Centel. Now, starting from last year, we have the objective to roll out this type of format into upcountry. So the first one that we roll out this type of project would be the Central Korat project, which have 3 uses in one area. So we have the retail, the residential, and last year we just opened the Centara Korat Hotel. And this year we'll continue to have this sort of mixed use project with 3 use with more than 2 uses going forward. So in first quarter we have Centara Ubon, which follow what we did with Central Korat before. The reason why we also focus on ramping up the non-retail project is because this also allow us to expand business opportunities beyond CPN's land bank. So last year we also opened we also launched the residential projects next to our sister company shopping mall, which is Robinson Lifestyle, and also the premium budget hotel next to the Robinson Lifestyle Baldwin as well. So for a 5-year picture, we still aim to grow at a mid-teen revenue CAGR, and you can see that because the base for the retail project has become bigger, most of the growth driver would be from the hotel and the residential parts. So our revenue contribution would change slightly, but the retail proportion would still be the main contributor. So right now it's more than 80%. By 5 years, it could be lower to about 75 to 80%, and non-retail would grow to 20 to 25%. Our 5-year capex plan, it's about mid-20 to 30 billion, but if you exclude the residential part and also the part that is contributed to projects completed after 2027, we're looking at about mid-20 billion, which can be majority funded by the operating cash flow, because if you analyze our first quarter operating cash flow, you could get about 22 billion-ish. So it will be funded by the operating cash flow mainly, and we still have room for gearing slightly. As you can see, consistent with our 5-year plan, majority of the new projects this year would also be in the residential and also hotel expansion. We do have one shopping mall to be added this year. And so far we are guiding we are aiming for the revenue growth of more than 20%. As you can see, about mid-teen would be coming from the rental and service business, but the more growth driver would be from the hotel and residential business. As I mentioned, in terms of new retail project pipeline, we do have one new upcoming project in Bangkok, which is the Central Westview. This will be open in October this year. Westview is in the west of Bangkok. It is in the wealthy residential area. So it has the pre-opening occupancy looks very promising. So we think this will be a good project for us. In terms of next year, we have 3 new projects coming. In the first half would be Nakhon Sawan and Nakhon Pathom. So Nakhon Sawan is the gateway to the north, and Nakhon Pathom would be the province that is not too far from Bangkok. So at the beginning of the year, we also have the plan to expand into Krabi as well. So this will be completed in fourth quarter, but please do note that all three are in the smaller size provinces shopping mall style. So this is the Dusit Central Park that we already communicated that this is part of the mixed use in Bangkok that we're continue to build, and it would be completed starting from 2024 onwards. For the non-retail pipeline, we have 7 residential projects that we target to launch. Mostly would be in the second half of the year, 3 high-rise and 4 low-rise. We also have planned to launch 6 new hotels, and as I mentioned, we already opened one in March, which is Centara Ubon. And we actually opened another Go Hotel in May, which is the Go Hotel Ban Chang. But we do have a few more coming in the middle of the year, and for Centara and Centara 1, this will be in towards the end of the year. So in terms of the operation update in first quarter, the tenant sales continue to be similar to fourth quarter, which is very close to pre-COVID level. But if you look at the traffic, it continues to improve. So if you recall, fourth quarter traffic was about mid 80% compared to pre-COVID level. First quarter, we're looking at about close to 90%, and so far in April, I think it went up to about 90%. So the traffic continued to be on the uptrend. While if we're looking at the occupancy, it continues to be at about 90%, which is close to pre-COVID level. But for our community mall, it came down slightly because we reopened one of the community mall that we just completed the renovation, which is Marché Thong Lo. That one added about 10,000 square meters in terms of NLA. That's why you see the occupancy dropping slightly. For the office business, the occupancy continues to be at about 90%, and in terms of ARR, we still managed to raise the rate since pre-COVID. So the rate that we managed to raise is about 1 to 2% a year. This slide, it may not be familiar to some of you, but we want to provide new drivers apart from the ARR, occupancy, and NLA that we normally discuss. So what we normally discuss is actually the navy blue part in the pie chart, which is about 2/3 of the retail rental revenue. But we do have another 1/3 that we have not discussed before. So if you look, about 15% is actually coming from the common area charges that we communicated earlier, that we already implemented the new rate since February this year. And also another part that is actually the recovery is lacking the rental discount is the casual leasing and marketing, which the contribution is about 10%. So if you look at the lower right-hand chart, you can see that the year-on-year effect of the each component, you can see that the casual leasing and marketing actually have the highest growth because in 2022, it's still coming from a lower base compared to the normal rent that we collected. And this is the Marché Thong Lo that I mentioned earlier, that we just had a soft launch in March and added about 10,000 square meters in terms of NLA. So all in all, I think for our mixed use strategy, we have seen that it's sort of we continue to succeed in being the top of mind for tenants. So as you can see that our flagship Central World is the one of the top choice when global brands want to open the flagship stores in Thailand. So we have Nike and Adidas opening quite a big size of a store, and we also have Lululemon coming in the third quarter of this year. Central World is also the choice for F&B, overseas F&B brand to open the first store in Thailand, such as Shake Shack, and we also have McDoodle coming. Apart from the Western brand, we also have the furniture brand coming from Japan, which is Nitori. That one is also coming in third quarter this year. And for Central Phuket, Phuket, after we have seen quite a meaningful tourist recovery, we have observed quite a big jump in terms of tenant sales, and also we have seen the residential side pick up as well. So our Central Phuket is the only luxury brand malls, and it continued to attract new brands coming into Phuket because of the improved purchasing power that we saw. For hotels, in terms of occupancy, in first quarter, it continued to improve from fourth quarter last year. So as of the end of first quarter, the occupancy is about 65%, improved from 61% in fourth quarter, and it's the result of the occupancy improving across the board, especially Hilton Pattaya, which continue to show strong performance in terms of occupancy and ARR. But because we do have hotels that target domestic travelers, we see that average room rate actually declined slightly because of the seasonality impact. And if you compare these numbers to 2019, it's actually not an apple-to-apple comparison, because back then we only have two hotels, which is Sentara Udon Thani and Hilton Pattaya, so it may not be an apple-to-apple comparison. And if you look at RevPAR in first quarter, it was actually dropping slightly by about 6% quarter on quarter because of the room rate that got impacted by the seasonality, as just mentioned. And this is the picture of our newest hotel that opened in March. For the residential business, in first quarter, we achieved pre-sale of about 1 billion, which about half was from low-rise and half from high-rise. The drop Q1Q mainly coming from we have more new projects launched during fourth quarter, while in first quarter we did not launch any new project. And projects that drove the pre-sales in first quarter were low-rise projects in Bangkok and the high-rise projects in Phuket that I mentioned earlier. Transfer for this quarter was close to 700 million, which is driven by the same low-rise projects that I mentioned for pre-sales, and also the high-rise project in Rayong, which continue to get the transfer continue from fourth quarter last year. So at the end of first quarter, we have a backlog of close to 6.4 billion. Majority are high-rise projects, and that will be completed in second half of this year onwards. So we expect to transfer about 40% of the backlog in the second half of the year, and also another close to 50% in 2024. And as I mentioned, because traffic continued to improve, our rental discount for this quarter actually normalized already at about 4%, which is quite similar to what we saw during 2019. So in this quarter, there's only one non-core item, which is the investment income from Rama 2. So looking at the core performance, we're at about 2.9 billion. Because in terms of like the performance, I would like to compare on a quarter-to-quarter basis, because first quarter was still quite a low base. And even though we have a lower transfer for residential business in first quarter, but our retail rental revenue continued to do very well. That's why the total revenue only drops by about 3% quarter-on-quarter. But if you look at like the gross profit and also the net profit number, is actually improving quarter-on-quarter, partly because of the continued improvement in gross profit margin in the retail rental business, and also lower SG&A, which is the seasonality impact. One thing I wanted to highlight is the revenue from the food court business. So if you look in terms of absolute number, it's actually back to what we had during 2019 level. But if looking in terms of percentage to retail rental revenue, you can see that it's still lacking what we saw during 2019. So first quarter, we're looking at about 2.4%, whereas in 2019 it's about close to 3%. That's why the gross profit margin is also not back to what we had during pre-COVID level too. And as I mentioned, if you look at gross profit margin, first quarter we achieve about 52.4%, which is close to 200 basis points improvement quarter-on-quarter, and this is mainly driven by the rental and service business, which saw gross profit improve by 130 basis points. And all in all, actually, if you look in terms of sales and also the net profit number, we already surpassed to what we saw during 2019. But if looking at the net profit margin and ROE, we are still slightly below. The main reason is actually from the finance cost that we have to pay as a result of the Siam Future acquisition. In first quarter, our gearing slightly improved from 0.82 to about 0.8, as we have repaid some of the long-term debts, and our average finance costs slightly improved, went up in line with the rising interest rate environment from about 2% to 2.2%.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณนะคะ
Thank you for having us as well. Have a good day, everyone.